Alright, just a quick plug for the Green Star Trading Patreon here. If you're not a member yet, consider clicking on the link in the description box below, heading over, having a read of the tiers here, and signing up now. You'll be charged on a pro rata basis going forward each month. If you were to join our most popular tier, which is tier 2 here, you unlock the public Discord where there are dozens of channels for you to discuss multiple subjects with all of our members. You can ask me anything you like. There's a dedicated channel there where you can ask me questions about anything you like: market opinion, technical analysis, Elliott wave issues, previous videos, you name it. You also unlock all of my educational series, including the trading series, the 16 video strong Elliott wave series now as well. If you go for tier 3, you get all of the benefits of tier 2, and you also get the monthly dividend calendar, stock rating system, and a video which supports that as well. One of the biggest benefits of joining tier 2 or tier 3 is the weekly live stream, which goes on for sometimes between 3 and 5 hours, and you can put in requests for the charts you want me to look at in the week prior, and I will come around and do that in the live stream. Now, if we have a quick scroll down here, you can see we've now got 187 exclusive posts on the Patreon, which can't be unlocked anywhere else. You can't see them on YouTube. The most recent one was added just a couple of days ago, which is called The Goal of Trading. Now, there's obviously an opinion piece and subjective, but I do proffer a lot of important and useful information in this, and that's the kind of thing that you're interested in. This goes into the educational series as well. And yeah, we've had a couple of live streams recently, which are all time-stamped. You can go back and watch them. We've had the dividend stocks review, picks for February 2023, the dividend calendar, stock rating system, another live stream, and we had our economic indicators for January 2023. We'll have our economic indicators video for February 2023 coming up for tier 2s and tier 3s as well soon. So there you go. Thank you very much for listening. Please consider signing up, and now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time to have a look at another one of our top of the S&P 500. We're looking at Aapl this week. I know it's been a couple of weeks since I last looked at one. I just can't seem to keep a schedule of one a week at the moment, can I? Unfortunately, if I'm sounding a bit rough at the moment, it's because I'm down with another bloody cold. Believe it or not, this is just a constant house of plague since the new year at the moment. My little boy, bless him, is teething, and he's just a joy to be around at the moment. And he's had both the stomach bug and the cold while he's been teething, so we have had many a sleepless night lately. And my little girl, bless her as well, she's tough as nails. She just sucks it up and gets on with it. Putting the men in the house to shame, I have to be honest. But either way, I'm going to do my best to get on with it today. Enough chit chat. Let's have a look at Aapl. So I wanted to start with a look at the long-term time frame, just to bring anybody who's new to the channel up to speed on what I'm thinking with Aapl. And this will help put into perspective the recent correction we've been in, because there's lots of varying opinions going on at the moment. Some extreme bearishness, which I feel is very much disproportionate to the actual risk here. That's just my personal opinion. I remember the GFC like it was yesterday, okay, which was, we'll come to that in a little while, but was a completely different kettle of fish to the one that we're in currently. But let's just have a quick reminder of the long-term count. So I'm just going to bring up a simplified version of it. So, looking at corrections in time first, in the sequence of what I'm saying is a very, very long wave 3 extension. I don't see Aapl going bankrupt tomorrow. I don't see it disappearing from the top 5 in the S&P. I don't see it disappearing from the S&P at all. I see it continuing to march higher, and that's what I think is going to happen over the long term. So coming all the way back to the long term, to the late 1980s, we have, depending on whether you draw the start here or here, in terms of the first significant correction we come across. Having counted through it multiple times, that's the conclusion I've drawn, that's not a word, have drawn. And that's a correction of 3,738 days in length, so over 10 years. Now we could label this cycle wave degree, super cycle wave degree. I've chosen to label it grand super cycle degree. Now the reason I've done that is because Elliott wave only goes from, super millennial down to minuscule. Now, I don't believe we've ever witnessed millennial degree waves at any point. It's probably hundreds of years ago until we do. Or decades and decades at least, I would have thought, long after I'm gone. Either way, we may have witnessed grand supercycle degree in some markets. But the issue is, if I were to start at supercycle degree, By the time I get up to here, I'm going to run out of wave degrees to work with, if even coming all the way down to minuscule. So for practical purposes, I've started at supercycle degree. Now, I'm not necessarily saying it has to be, but a 10-year correction is pretty significant. The next one we have is 1,120 day correction. 1,120 day, 3,738 day. The next significant pivot we witness is 393 days, and the next significant pivot we witness after that is 218 days. So that's your time. Now let's have a look at it in price. So the first correction we see here is 82.59%. Then we get a correction of 83%. Then we get a correction of 61.47%. Then we get a correction of 45%. So we can see quite clearly that each successive correction is decreasing in both duration and magnitude. Okay, so the conclusion we draw is that they're different wave degrees. Right. It's the easiest and the simplest explanation for both the reduced severity of each correction and the reduced duration of each correction. It just makes the most sense. So if that's the case, then we have gone 1, 2, 1, 2, 1, 2, 1, 2 over the space of 30 odd years as we go into this gigantic 3 of 3. Now there will be significant corrections in amongst this, and there have been. There's been a 39% correction here, 35 here, and a 37 that we're currently in. But they are not on the 82, 83, 61 kind of magnitude scale, or even the 45 that we've seen here. Now it could get worse, arguably, and this could all be wrong, but that's how it appears to me at the moment. So just as a quick reference here, I remember the GFC back here, a 61.47% decline that lasted about a year. Regarding sentiment and systemic risk due to the insanity that was going on in the mortgage market at the time, if you've ever seen The Big Short, you know what I'm talking about. Just the level of systemic risk in the banking system, and therefore global systemic risk here, was absolutely toxic, and it turned out to be absolutely toxic. And this was basically the end of the world. Right, that's how it felt. It's hard to explain now just how many of your bearish voices, which we hear from today, and we do at every major top or major correction, were literally saying that the market's never going to new highs. This is a 1-2, 1-2 down, and it's game over. Okay, and they were wrong. And this was extremely severe in terms of the actual risk to the global economy. We know it was because of the damage it did. And if it wasn't for the... and I mean this as facetiously as I can possibly mean it, if it wasn't for our Lord and Saviour Ben Bernanke getting us out of this mess, then we would likely have fulfilled those bearish voices. Now I personally think the guy's a prick, and I feel that the attitude we undertook, rather than take our medicine, was to just kick the ball down the road indefinitely, may well prove to have been the bad decision or the wrong decision in the long term. But that's the decision we've made, that's the world we've created, that's the world we now live in, and that's where we've moved on since. So that's the world we have to live in my opinion, and that's the world we have to operate in. And in that world, the count extended higher again and again and again and again and again and again. If the count is correct, and this is a sustained extension within a wave 3, then there is no reason it won't continue higher and higher and higher and higher in the decades to come. And that's what I think is happening with Aapl. Now, the reason I cite the GFC and our reaction to it and the attitude is because it's my personal opinion on sentiment at the moment. The rate rising cycle we've gone through, for those of you who can just cast your minds back for the last 14 years of QE1, QE2, QE3, QE4, and even more recently in the last few months, if you could just cast your minds back to the predictions of what would happen to assets like Aapl or S&P in general if we saw 400 basis points, 450 basis points, 500 basis point hike to interest rates. And then ask yourself if those bearish predictions about that scenario have come to fruition. I would argue they absolutely have not. Okay, because the voices which were screaming for an total collapse have been proven wrong so far. Now, it doesn't mean they won't have their day. They always do. The bears always have their day eventually. But I'm just simply saying there is no systemic risk in this macroeconomic period. I'm not saying there are none. I'm saying there is no which compare to what we went through in the GFC. That's all I'm saying. So let's just keep our heads on our shoulders. Now, more volatile assets, assets which have got far more, cyclical sensitivity to interest rates have suffered. There's no doubt about that. We've seen much more significant drawdowns in other areas. Okay, we've seen 60, 70, 80% drawdowns in other areas. This is not the case with Aapl. Aapl has basically done a little bit of a sidestep move of another 30-odd% correction. Not insignificant, but not severe. Okay, so now let's look at a little bit of geometry to support this long-term view. So if I take what I'm saying, the GSC pitchfork here, this thing has been respected consistently ever since this pivot. Right, we can see constant interaction with the median line. Okay, tests from underneath, tests from above. We can see the levels like the 23.6 and the 38.2 get frequently tested. We can see how the 38.2 here was resistance multiple times until it was broken through from below, and now that same level is being tested from above into what I suspect at the 38.2 level is actually turning out to be another wave 4, or a larger wave 4 within a larger wave 3 that's got blah blah blah. Okay, as you can see here, the 61.8 was constant resistance. We poked our nose above it, we've come back and moved around inside of here, and that's the long term pitchfork piece of geometry we've got going all the way back to the 1980s, which we are well within. Now the day may come when we have to come back and test the median line here. We may be doing it now. It is possible. I'm not going to say that's impossible, and that will be a much more severe correction down into the high 80s perhaps, in price, and we will test the median line from above, and then we will march higher again. I have no doubt that long term that's what we're going to do. We're probably going to have a major retest and a major move back up at some point. If we come down to a smaller wave degree here, we can see everything within our cycle wave degree this is also contained within this pitchfork. And if we just stretch it out a little bit, we can see how also there's been some very significant consistent tests of certain levels, like the golden zone here, the median line back tested here, golden zone, 38.2, median line here, golden zone, golden zone, golden zone, 23.6. The 38.2 here on the cycle wave degree proved to be a consistent diagonal support. 1, 2, 3, 4, 5, 6 touches of it from below for a period of from late 2020 all the way up to April 22. We've then come back to the median line, up to 38.2, down to 23.6, back to the median line again. So this is the cycle wave degree pitchfork that I'm using to project the geometry at this degree, and it seems to be getting very well respected. So this long-term view is still very much intact as well. If we bring it down to a parallel channel, this is intermediate degree that I'm looking at now. If I just bring back the simple count for a moment, so 1, 2, 1, 2, 1, 2, 3, 4. And this is as far as I've got with the count at this degree currently, that we're doing a minor 4. It could be intermediate 4, but I have trouble counting it in that way. It looks like it wants to extend, so I'm looking at it into minor 4, minor 5 to come, into intermediate 3, into intermediate 4, carrying on in primary 3 and intermediate 5. Right, and that's what I think is coming. So on that note, let's now come down and have a look at the short-term count, try and keep this as brief as possible. Right, so a quick look at our weekly moving averages as well. So we can see that we're currently back testing the 60 weekly exponential moving average here, still a long way from a 250. On the monthly time frame here, we're still a long way from the 60 exponential moving average, and on the daily time frame now, we can see that we're actually trying to get back above the 250 exponential moving average. We're currently trading above it. We just wicked down to it at the week's at the day, the week's close on the Friday, put a little wick down to it and bounced off of it. My hunch at the moment is that we're pretty much done with the move off of the low. Alright, so somewhere we may push a little higher, but I think we're basically done. If we look at our indicators for a moment on the daily time frame, we can see that there is some weakness coming into the top here. Now we did not eke out an intra-weekly high, but if we're looking at the closes, which is what we should be looking at when we're looking at the RSI, we can see that we did get higher closes on the daily time frame here and here, and we got weakness between these points on the RSI. We got a crossover on the MACD of the average through the signal, a little red bar on the histogram as bullish momentum has died off. So we're near a top. It could be 3 into 4 into 5, and we're going to continue that weakness on the 5th wave before we roll over, or we could be done here and about to roll over. So my overall feeling is that the move off of the low is complete, and we're going to see some kind of pullback. It could be small before we continue higher, doesn't have to be a deep correction, or it could be something more significant. Right, so on that note, let's now look at how we've expressed that with the count. And let's switch off the moving averages now, we don't need these. And let's bring up there we go, extension count, correction from the high, and we're going to come down to the 4 hour to flesh out the detail here. So what I'm seeing here is the best I can make of it, and it is a tricky count, is that it's actually a sideways combination. I know it's a 30% decline, but in the great scheme of things, relative to a lot of markets, we've gone sideways rather than down. You have to remember where we are in the long-term count. A 30% decline might feel like a lot, but it's all about where you end up. And if we look at the price currently, from the all-time highs, we're only down 16.3%. The first pivot we had from the high was only a drop of 3.5%. And sorry, that wasn't the first. The first one was literally minute. It was like 0.5% or so. So we've had much more of a sideways feel to this than a sharp. More of a sideways feel correction. Sharp correction is a zigzag, right? Or a variance of zigzags. So it can look like an impulse, could be WXY, WXYXZ, or just simple ABC. That's not what we've got here. This does not resemble a zigzag, right? It resembles some kind of sideways mess. And the way I've looked at it is that we've had 3 here, 3 here, 5 here, and this is a flat. We've had an X wave here and then a zigzag. So we've had flat into zigzag, which is a sideways combination in this case. And that's the best I can make of it at the moment. The only way I'm going to be convinced that it's something else is if we make new lows. Because at the moment, we just have not started this impulsively. Okay, we have not gone 1, 2, 3, 4, 5 down. Right? We can try and make a claim that this is 5. Technically, I guess we could, but I have issues with that, which is there is no 5-wave structure in the first move. It's free. Okay, so if it's free, then it's a zigzag, not 5. So if we lead with a zigzag, right, and then we come back to within 90% of the high, I'm much more likely to lean into this being a flat than I am to lean into it being a 1 into a 2. And now the fact that we've come back again to within a fraction of that high, at that point I feel the whole thing breaks down if you're trying to go 1, 2, because you've gone 1, 2, 3, 4, 5, 1, 2, and then where's your next 5-wave move? This is 3. That's not 5. So yeah, I can't see a clear impulse down. I much prefer to look at it as a series of corrective structures. I could be wrong, but it feels like a series of corrective structures. So that's what I'm looking at the moment. So for the meantime, I'm assuming the low's in, and I'm happy to run with it from here. So what we'll do is we'll just shift all this up into where it should be. Now, I had an ABC projection there at 1 to 1. We fell short of it, but we've now come back into all this prior corrective structure here. So we can see essentially on the That's support we came into. Demand area zone we came into here and bounced. I'm just trying to find. Yeah, so basically we're coming back into major resistance, okay, where we've had highs back tested as lows again and again, back tested as highs again and again. Right here at 157.09, it's in this region, and we've come back to that resistance. We've also come back further from a recent high. If we go to our golden zone for the moment, we've come straight back to the golden zone, gone through the 50 straight to the golden zone. So whenever we see a 61.8% retracement off of an external pivot, we should consider meeting resistance at the 61.8. Doesn't matter what it is. Okay, it could be 1 into 2. It could be A into B, looking for a C of a continuation of this sideways structure. Yeah, it could be any number of things, but whatever it is, you come back to the golden zone on some kind of bearish divergence, which we've seen, breaking some kind of upward trend, which I think we're probably in the process of doing or close to doing, then we should be expecting resistance. So for the short term, the bears should be looking at shorting this off of an impulsive move off of a high. If we get an impulsive move off of a high and a retracement back, it's probably a better short opportunity with a small margin of risk in the meantime, rather than being long, because I think if you're being long now, trying to get in now, you're chasing it. Okay, you're probably chasing it a little bit and should wait for something more significant to come back to you. So let's now come in on the small time frame and find this count off of the low. So let's come down to the hourly chart here, zoom in on this thing. So we've come to the 61.8, we know that. I've got this as a 1 2 1 2 3 4 3 4 5 into 1 at minor degree, A, B, and now 5 waves down in a C is what I'm expecting. It could extend higher, but once again we've led quite clearly with 3. We've come back quite clearly in 3. If you get 3 and 3, the next thing you should be thinking is 5, because that's most likely a flat pattern. Now it could be another zigzag, okay, right, but given the depth that we've come back, enough to do a regular flat, we should favour 5 over 3. But it could be 3 3 3 as a zigzag, but I think this is likely playing out as a flat. So if we now just bring up, I should have a parallel channel for this somewhere. Tell you what, let's just come off a vlog and let's just use a regression channel from below. This is the intraday high. So as you can see, we trended quite nicely inside of this, bounced out of it, went beyond 2 standard deviations from the mean, came back to it, bounce, 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 back test, low, low, bounce, 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 61.8, and now we're out of the thing. So that suggests to me that the trend up may well have broken. Now if we take the actual trend line from the lowest points we can get, we have broken it slightly, but it's not the most decisive break yet. If we look at potential retracement from below to the high, here's our 50, which I'm thinking is the kind of target area we should be looking for. Flat pattern could be shallower. Okay, could be significantly shallower, could catch us out in that case. You could go something like 1 A, B, C to here, and that could be a shallow 2 before moving higher. Could also be A, could also be B. As a rule, once we've made a pivot off of the low, found resistance and come back, wherever we come back to, there's a high probability of clearing this pivot. Right. This is something we talk about in our live streams. This is something we talk about on the Patreon frequently. We see it carried out on all time frames time and time again, and the reason is because Elliott waves move in 5s and they move in 3s. So if it's a impulsive move of 5, okay, then it's either the finish of something, the end of something, such as the C of a flat pattern, or it's the start of something, such as a wave 1 or an A. Now, higher probability off of a major pivot followed by an impulse is far more likely to be the start of something. So if we get 5 waves, we can say A. So we know whether we come back in B, how deep it is, or whether we come back in 2 or 1. We know that the next move will be to clear that pivot. And that's what I would expect to see. So whether we come down in a flat, or whether we are going to push a little higher in the meantime, maybe, to get a larger degree. Eventually, whatever we do, we will come down and then come back higher again. That's what I'm expecting to happen over the longer term. So that's my count at the moment. That's the best I can make of it off of a low. I think it's a flat pattern. I think we've got 5 down. If we do make another high, we push our top of our count up a notch. So this becomes the 3. This will be a 4 as a flat pattern. We'll look for a 5 into a 1, and we'll look for that. We'll look for divergence, bearish divergence, weakening momentum, all the things we normally be looking for, and then we'll be looking for another top, same idea, back and then higher again. So that's what I'm expecting to occur. Alright then, so I think that basically sums up the short-term count at the moment. I think we've most likely got a low in Aapl. Only really a break of this low is going to convince me otherwise. If this comes down exceptionally deep, I'm going to start obviously getting concerned for the bullish case. But here's what I've mentioned before in other videos, which is why not play both sides? Right, that's what we're trying to do here. We're trying to be traders and we're trying to take as many opportunities as we can. We're nearer the highs than we are the lows. We have a potentially impulsive move down off of the high and a retracement underway. It is far safer at this point to be short once we get this retracement. Now if you want to wait for another, what we call the STS, now we didn't lead with an impulse and a zigzag, we led with 3, so we're working with the idea of it being a flat, so we're not going to have as much opportunity as we would if we'd led with 5. But we can still work it onto a smaller time frame, so we can go 5 down, 3 back, and if we can short from there 50 or 61.8, or we can just wait again for 5 down, 3 back on an even smaller time frame. This now becomes margin of risk, and we can get a short trade in down in these 3rd, 4th and 5th waves in the sea, and we can stay short until we get a reaction, until we get a bounce, right, taking us in the opposite direction. So just because you've got a longer term bullish count doesn't mean you can't appreciate that it's going to top out eventually. It doesn't mean you can't appreciate that it's going to correct eventually. It doesn't mean you can't short into the correction, and that way if it does turn out to be wrong, we're short. So just trying to be flexible, just trying to keep an open mind, keep our options open. When we see weakness into a high and a move down from that high in an impulsive manner, we should always be preparing to short it, because that's the smallest margin of risk. When we see bullish divergence at lows and a strong move off of the low, okay, and a pull back towards it, we should always be long, because that's the smallest margin of risk. Right. But one thing we want to avoid doing, simpler, easier said than done for the average trader, is we want to avoid selling lows and buying highs. So how about we finish up now with a quick look at the bearish count, bearish idea, and then we'll wrap things up. So this is a very bearish idea, and I'm not convinced by it really, to be honest. It's an alternate count. I've actually got 2 I need to go over. So here's a diagonal. Now the reason I haven't said the 4's in yet is because this is not a complete zigzag. But then again, this didn't look like a complete zigzag either, so maybe it is, who knows. In which case, we could say the 4 was in. It could have further to go, that's absolutely possible as well. But it does kind of look more diagonally as a contracting structure if we were to have it in now. Big problem I have with this is we led with a clear 3, not 5. So this is not ABC. That's the biggest problem. Not as a zigzag, that's the biggest problem I have with it. Much more likely to be 3, 3, 5 as a flat, fitting my sideways combination. But let's just imagine there's a 4 in here somewhere. 3 and 4, and we have to imagine it. Then we can go ABC as a zigzag into 1. This is some kind of zigzag into 2, although it does not look like it, but it couldn't have been an impulse because we came lower. So we'll just give it the benefit of the doubt, as we've had to for the bullish count anyway. ABC here actually looks like a zigzag into 3. This again, mimicking this move, looks like an impulse, but it's actually a head fake zigzag into 4, and then 5 down. This becomes A, then we get B, then we get C. Right. So that's the first bearish idea. Second bearish idea would be that it's a continuation of the sideways combination we've already said, but it's got an extra leg in it. So instead of being WXY, it's W, so it's still got the same flat. X, still got the same zigzag. Y, X, and then who knows? Who knows what the Z's going to be? Because we're not saying this is a zigzag, so we didn't get a clear 5-way structure in the A. We're saying it's a flat. So a sideways combination is more likely. at that point than a zigzag. So I don't know, it could be flat, X wave, zigzag, X wave, flat. It could be something like that. And the whole thing's just a giant sideways head fuck. That's just going to screw you over left and right. So, you know, we'll have to wait and see. That's a possibility. I'm going to give that the lowest possibility at the moment. And I favour the idea that it's done. I favour the idea that we've got a simple count already complete. And we've had our way forward done. Now where's my corrective count? There it is. And that we've had W, X, Y, flat into zigzag, and now we're going 1 into 2, 3, 4, 5 higher off to new highs. We'll keep an eye out because we are getting weaker near the highs here. If this breaks down, we'll look, like I said, shorting opportunities first, longing opportunities later. Alright guys, thank you very much for joining me on this technical analysis of Aapl. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and feel free to sign up. It's a great deal. And if you're not following me on Twitter yet, please do so, as I always post videos to Twitter once I've announced them on YouTube. Right, take care of yourselves guys. I'll be back with you as soon as possible. All the best. Bye bye.